Hey, what's going on? This is Leo. So we're going to be doing a little bit of a follow-up from yesterday's video talking about the insurance with brokerages. Before we do, if you do find my content valuable and you're not subscribed, it really helps me out to grow this channel and to help out more people. And also smash that like button. So let's go ahead and dive right on in. So we're talking about the Sipc Insurance. Now, they offer 500,000 of total protection, meaning between your securities and cash within the account. The cap is 500,000. 250,000 of that can be cash. Now, that would be paid out immediately if the broker were to become insolvent. Now, I had called and I spoke to someone at the SIPC yesterday, and what he had actually informed me is that this is a little bit of a loose rule. For example, back whenever Bernie Madoff did his Ponzi scheme, they made the exception and they actually paid out customers immediately 500,000 in cash rather than only the $250,000 cap. So it's at the SIP's discretion whether they're going to cap it or not, and that would cover everything from lawyer fees, legal fees, and whatnot as they're going after the insolvent broker for whatever fraud or misdealings they may have done. So now additional losses above the 500,000. So let's say that you file a claim with them for 700,000. The $500,000 would be paid out immediately, and then you would have the additional $200,000 if that is recovered. So any additional money that gets recovered would then get paid out to cover your losses beyond that point. So the fund that they actually have is currently, as of yesterday, $4 billion. They have an additional $2.5 billion line of credit with the U.S. Treasury. Now, the gentleman that I spoke to yesterday told me that they've never had to use that. Even with Bernie Madoff, they never had to dip into that. So now we're going to move on to the trustee. So this is very important, so pay attention. You must file a claim with the trustee within the time limits provided. So as soon as this goes down, let's say as soon as your broker fails, you need to be in contact with the SIPC. You need to find out how to file your claim. You need to make sure that you get everything done within the time allowed. Document everything, because what the trustee is going to do is they are going to reference broker records. They're going to be looking for trade confirmations, monthly and quarterly statements. And if what I'm going to be doing is recording. So if you have like OBS Studio where you can screen record on your computer, or even just screen record on your phone if you're doing trades and you're concerned about your brokerage becoming insolvent, going into bankruptcy, record it. That's one of the best things that you can do. Record your actual trades as you make them. Go in, record, then place your buy or sell orders that you want to do. Also, like I said, document your trade confirmations and your monthly and quarterly statements from the brokerage. Let's see. So basically what this whole SIPC insurance is for is if a member broker fails, so if they become insolvent, right? If they go into bankruptcy, their job is to step in. They hire a trustee. They have lawyers. One of the things that they'll actually do is they will apparently, let's say for example, TD Ameritrade goes into bankruptcy, they would have the lawyers immediately transfer your shares out to a new brokerage. So for example, they would go over to Fidelity. Now, if we're in a situation where the entire market's collapsing and all the brokers are going bankrupt, I don't know what to say about that. I'm not sure. But in the past, what they have done is they have immediately transferred share ownership to another brokerage. Apparently, what they will do is, and this is actually really interesting because if we're theorizing that there are synthetic shares out there, meaning shares that do not exist, what the gentleman told me is that they will actually, and I didn't ask specifically about synthetic shares, but he brought this up with Bernie Madoff, is that if you go into your account and there's supposed to be stock held there, but there isn't, that they will actually buy back the securities and transfer them into your account. So that's interesting because if they're actually going to be using, and I mean, it depends, because I don't think they're not going to blow the entire fund, right? Going in and trying to buy up the stock. I just don't think they would, because I mean they've got to be smart, because they have a limited amount of money here. They've got 4 billion and 2.5 billion. So I mean, it goes towards lawyer fees and other things as well, and that's going to be split amongst all of the people within the lawsuit. So to what extent they would go in and buy up shares, I don't know. So that's why I don't want to say what would happen. My gut tells me that I don't think that they would just blow the entire fund trying to buy up shares to give to people. I know that's what majority of apes would want, because that would drive the price higher, but I don't know whether that would be the case. So now going on to the additional coverage. Now, whenever I spoke with TD Ameritrade, they seemed very confused, and I don't think it was necessarily that they were trying to be dishonest. I just think that the questions that I had were a little bit more advanced than your average TD Ameritrade customer service representative or even broker that I spoke to would be dealing with. It's just not something that they deal with. They typically just say, here's your brochure that talks about it, on to the next. So they had told me that the additional 149 million is with the SIPC. That is not true. The London Insurers is not affiliated with the SIPC at all. It is additional coverage that kicks in after the SIPC has been depleted. So important things to note here. The combined coverage from SIPC and the London Insurers per client is 152 million. But, and this is a big but, and this is why I wanted to dig into the specific details, the TD supplemental coverage aggregate limit is $500 million over all customers. So if you have 500 customers that have losses of $1 million, each of them gets $1 million. It's not actually 152 million per client. And whenever I first saw this, I was like, well, how could that possibly be? Because where are they getting that money from? Is that just a big Ponzi scheme? It's not as if they have $500 million just sitting in an account somewhere for each client. I mean, that'd be absurd. So it is, in fact, a cap on their policy of $500 million. It's kind of like if you get in a car wreck and your limits are, say, $30,000 for your liability coverage, and you have 5 people in the car. Well, that coverage is going to get, from my understanding, split amongst the people. They're not going to go above it. And then some insurance policies may have additional coverage for an additional person in the car. But this makes a lot more sense than 152 million per customer, or client rather. So the SIPC does not protect non-SIPC members. So it's important to make sure that your brokerage has a member SIPC logo, because that's going to be what verifies them. And typically, if you're with the big brokers, Charles Schwab, Fidelity, TD Ameritrade, you shouldn't have those issues. But go ahead and check. I know TD Ameritrade is a member of SIPC, but check with the other brokerages. Look on their website. It should just have a logo there that says they're a member. Because actually, how this fund is funded is that they charge them, I believe it's monthly, a fee, and then that just goes into the fund, and it just grows and grows and grows until something catastrophic happens, and then they have to dip into it to pay out customers. What I did say is, and this is important too, because this is one of my big concerns, is the gentleman I spoke to says that they won't sit there and try to negotiate you down. So let's say you have 500,000 in losses. They aren't going to come in with some sort of an arbitrator and try to say, well, we know you have 500,000 in losses, but we think that you deserve 100,000. From what he told me, they will pay you the losses. If you lost $500,000, you will get $500,000. So that's very important, because housing insurance, car insurance, health insurance, they all try to talk you down. So it's important that the SIPC, at least, and I can't speak for London Insurers, but SIPC told me that they do not do that. They pay what is owed. So they don't cover market loss. So this is also kind of interesting, because at face value, you see it, right? They don't cover, if you make an investment, it goes up, you don't sell, it comes down. They're not going to pay you the difference as what you lost on an investment, or if you just go into an investment and it crashes. But what's interesting is that if you go in to a stock and the price goes up, you sell, you've got several $1,000,000 in there, right? And then that brokerage fails and you can't withdraw your money. Well, now only $250,000 in cash is covered. Well, maybe if they make an exception up to $500,000, but that is a very important distinction. And even the 150, the additional 150 million, I believe it's only 2 million in cash, and the rest is coverage in securities. So that's kind of the catch. So what I will be doing is, as soon as I take profits, is I will be withdrawing those funds from the broker and moving them someplace that's safer. I mean, depending on what's going on at the time, I plan to move that out and just put it somewhere safer, especially if I feel like the brokerage is about to, collapse or something bad's going on. And you'll be able to see it. You'll see people talking about on the news, concerns of it and whatnot, and that'll be kind of my red flags going up. So they don't cover promise of investment performance. So, if you get in a stock and it doesn't do what you want it to do, they're not going to pay you that. And they don't cover commodities or futures except in uncertain circumstances. I have reached out to London insurers. I'm waiting for them to get back to me. I want to find the specifics as to what coverage they offer. And if or when they get back to me, I will update this with the information that they provide. So I'm going to dig in here with a little bit of technical analysis real quick. So it's just the same thing we've been looking at. We have a 1, 2, 3, 4, 5 wave going on here for a first wave of an Elliott wave count. We have the algo here, right? So it pulled, this is just computer algorithm, because I know I just got a lot of new followers from Lou, which I definitely appreciate. For those of y'all unaware, this is an algorithm that many different funds trade, not just hedge funds that are kind of nefarious and whatnot. But what it's programmed to do is it starts to buy at the 50, right? It buys all the way down to the 618, and then its target is the -236, which is a green line. And then they're programmed to take the next measured move in series. And so what that means is you start the pull from the 50% retracement pulled to the next high. And it gets more complicated than this, but this is just kind of the basic understanding. And then they engage and they will start buying at the 50, continue to buy down to the 618. So for example, here, price moved up, came back down, they kick in again and start buying at the 50. These algorithms are programmed to trade both sides of the market. So buy or sell, doesn't matter. They don't care. They're just there to get their target at the -236. And so what sometimes you'll run into is a fib fight where you run into opposing algorithms competing. So as you can see here, we're within this range. So they're buying it as it gets closer to the 50. They're selling it as it gets closer to this 50. You can see rejection, 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 but then they're buying, buying, buying. So until we get a break and decide which algorithm is going to play out, there's not a whole lot going on. It's just trading within a range. So that is essentially where we are right now. So that pretty much wraps up this video. If you found this content valuable, please like, share, and subscribe. It really does help me out to grow this channel and to help more people. And until next time, I'll talk to y'all soon.